Gaming giant Las Vegas Sands hitting after-hour session highs with the call now underway. Let's get to Contessa Brewer with all the details. Contessa.
Melissa, good to see you. In gaming, of course, investors pay very close attention to the property EBITDA. That's the earnings before interest and taxes and et cetera. In Macau, which was the first of the properties to close and has already reopened, that EBITDA number down 92% from last year. And also they're burning $305 million in operating expenses monthly. Chairman and CEO Sheldon Adelson says the impact of the pandemic is unprecedented, that he's never seen anything like it in his more than 70 years in business. And yet he remains optimistic things will turn around and soon.
I assure you, I have not said yay dividends and yay buybacks for the last time. I'm looking forward to saying them again, and hopefully very soon.
He says, in fact, as soon as things turn around, he's going to get back with the board and they're going to revisit the whole issue of dividends. Here's some more good news. Las Vegas Sands has a strong balance sheet, $2.6 billion in cash, access to almost $4 billion in credit. So it's paying its employees globally. It's continuing with its capital expenditures in Macau and Singapore. And they're anticipating a, quote, I'm quoting here, much better place in China this summer. They say far better than the U.S. They're looking at a phased reopening in China, perhaps Guangdong, which is a big feeder into Macau. And that may be why you're seeing the stock now up in extended trading, such a big jump as the call continues here, Melissa.
All right, Contessa, thank you. Contessa Brewer with the latest on LVS, which is up 6.7% after hours. Steve Grasso, is this best in breed compared to a Wynn, compared to an MGM?
So this has always been my favorite Vegas. I shouldn't say Vegas stock. It's just a gambling sector stock, and it's more weighted to Macau. But what this has that the others do not have is what Contessa just said: the Singapore revenue stream. The others don't get that. And by the way, Las Vegas by market cap is multiples higher than MGM and Wynn. So that would make it best in breed, I would guess, if you're playing along at the home game for fast money. It's always been my favorite. But if you look at the charts say that MGM and Wynn are a better buy, but Las Vegas seems to be the special one in the sector. I'd still be a buyer of LVS.
You got to wonder, though, if the Singapore exposure, while a good thing right at this moment in time, maybe a bad thing since they're seeing the number of COVID cases rise as we speak here. You got to give props to Nomura here, because last week they actually upgraded LVS, Tim, ahead of the quarter to a buy rating, saying that they expect Macau trends to begin normalizing at the beginning of June, which is basically right around the corner here. I mean, can we make that extrapolation then for some of the other names that are more exposed to China?
Yeah, look, I think you can. I think the Macau trends are obviously, remember, we started getting this Macau data in really November into December. But before that, we were actually seeing gross gaming revenue begin to reaccelerate into the holiday season. I think Vegas Sands also, yes, you can impute it into the guys that have even more exposure. But the one who's chopped its dividend and the one who seemingly has made prudent steps to actually manage free cash flow and balance sheet, I think is the one you feel more comfortable about in an environment like this. But when COVID-19 broke out, I remember saying this, Mel, and you were probably at home with two very cute ones. I was saying, I think we've got a dynamic where we don't have a consumer credit problem. We have a short-term disruption. I've certainly had to make an adjustment in that view, and I think a lot of people have. But ultimately, the case here for a recovery, what we've already seen in other parts of the economy, look at Taiwan Semi, look at other parts of Asia for those economies that didn't fully shut down. And you have to be encouraged at some of these early signs, even though we know this is not going to be a straight line back higher.
Yeah, I mean, I ask myself the question very often, guys, what is the first thing I'm going to go out and do when things, quote unquote, open up? Hopping on a plane to Las Vegas may not be among the top 5 or the top 10 or maybe it was never in the top 5. Certainly not in the top 20 anymore, BK.
Yeah, I mean, listen, sold to all of you. Singapore has shut down again because they've got more cases. You look at what happened in Beijing last week. They opened up their gyms. All of a sudden, they had an explosion of cases, and they had to close them down again. So I think this is going to be what's happening in this economy. It's going to be fits and starts. And the absolute last thing that I want to buy in this market, well, actually, the last thing I want to buy is cruise ships. The second to last thing I want to buy is casinos.
Guy, last word.
Well, hopefully you've used this time to watch The Godfather, and maybe you learned something about the casino business, Melms. But what I will say is I'll take the other side of BK and say I think Wynn Resorts could probably still go higher. I said it last week, and I think it could sort of continue to levitate into earnings at the end of the month. I think Citi just upgraded the stock, lowered their price target to 107. I don't think it's going there, but I think this is a stock that could easily trade 85 into earnings. So I think Wynn will get you done, and I would use, again, the time you have at home to embrace both Godfather 1 and 2.